So, with the situation we have right now, what is going to be our plans? What is really going on behind the scenes that has been making this market to behave this way? Well, during the Asian session today, we saw how this market saw the introduction of deep buying activity, enabling it to recoup some of its losses it made since the beginning of the week. Remember, the week started on a bearish note, dropping into the $2020 area. But the deep buying activity during the Asian session allowed the gold to gain some traction. But as it is right now, we begin to see some bearish move, leading to the breakdown of that ascending trend line. Now, well, the deep buying we saw this morning may be attributed to support from the escalating geopolitical tensions in the Middle East and concerns surrounding China's sluggish economic recovery. Additionally, a relatively subdued US dollar influenced by a softer tone in US Treasury bond yield could further bolster this commodity as it is. Now, despite these factors, a substantial upward movement in gold prices still remains uncertain right now due to the reduced expectations for an early Fed rate cut. Now, this shift follows several hawkish comments from Fed officials throughout the course of last week who all emphasized that it was premature to contemplate interest rate reduction at this point in time. Now, consequently, market participants have tempered their anticipation for aggressive policy easing in 2024. In fact, the odds right now in favor of a rate cut is currently at about 45%, as against the 85% at the beginning of this year. That's a tremendous turn down there, and it appears that market participants are not sure of what to do, and this is quite evident in this market. As you will see, price action has been consolidating within a tight range since the beginning of the week to emphasize the level of indecision going on in the market. Now, given this landscape and considering the events coming up later in the week, we have the S&P Global publications from the United States. We have the GDP data for Q4 from the United States later in the week. We also have the core PCE as well. Of course, these are high impactful events, and I'm of the opinion that market participants may want to avoid any aggressive bets and stay aside, waiting for fresh impetus from these economic features. Now, with the situation we have here, what is going to be our plans for today? How do we intend to hold our ground for today? Well, let's look at what is going on the daily time frame so we can have an holistic perspective into what is going on here. Now, looking at the structure from a broader and long-term perspective, what we did on the daily time frame was to take into consideration the nature of price action since the month of October, which of course shows that the market has been on a strong bullish momentum, evidently depicted with this ascending trend line to work with. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above the structure, we want to look out for buying opportunities. And to make our trading decisions easier for this week, we have our key level just right around the $2005 area. As you will see, immediately price tested the structure on Wednesday, Thursday of last week. We saw buy pressure resume again from that area, and in fact this level had been a strong buying niche since the month of November, as you will see here. Prior to that moment, it was a strong selling niche, so this level here had played a major role in deciding where price will be going. Now, for this week, we are looking at two possibilities, of course, that price may continue to respect the ascending trend line and continue the uptrend, or price breaking down the ascending trend line and the key level at the 2005 to incite a downtrend move. Now, we have a simple setup here on the 4 hours time frame, which further explains what things are looking like on this current structure. And after considering the nature of price action since the month of December, we had a beautiful demand zone where, as you will see, since the month of December, our sellers have found it difficult to break through this area. And every attempt by the sellers to break through has always been met with strong resistance from the buyers, as you will see right here. And in fact, during last week's trading session, where we capitalized on that strong bearish move, as soon as price got into this area, we saw another wave of bullish momentum. Now, in addition to this, is that since the new year began, that is the year 2024, it has been more of a profit-taking activities, as you see price continue to find lower lows and lower highs, hereby transitioning into what I will term a descending channel. You will see after connecting the series of lower highs, we have the resistant line of the descending channel. And when we connected the series of lower lows, we have the support line of that descending channel. And as it is, yesterday we saw price test a little bit of that descending channel before this bearish candle came in. Now the question is, how do we intend to position ourselves? Well, if you would ask me, considering the fundamental factors, that is the geopolitical tension, which supports the appeal for safe haven assets such as the gold, it makes quite a lot of sense to look out for buying opportunities. And this coupled with the fact that price remains above three parameters on this market structure. The first one is the $2,005 level. We also have the demand zone, and of course price still remains above this ascending trend line we spotted. It looks like buying this asset makes a lot of sense. But mind you, the reduced bet for interest rate cuts may be limiting the upside of this asset. Hence, we need to also consider the potentials that sellers also have in this market. Now, scaling down into the 1 hour time frame, what are we going to be doing to sell this asset? Let me talk about the selling potentials here. Now, the first thing first here is I would like to see price break down the $2,019.50 level, taking out all the buy positions here before I can feel comfortable selling this asset. Of course, you can see what has been going on here since the beginning of this week. Buy pressure. Every attempt by the sellers to break through has always been met with strong resistance from the buyers, as you will see right here. And of course, if you look at the nature of the wick of these candles, you will see that it reveals that sellers are not settling very well into that support line, giving us signs that buyers are still strong in this market. So for me, I will feel very much comfortable selling at the breakdown retest of the structure to join the decline to the downside. However, is it possible that we sell even before the breakdown of that structure happen? Well, we will need something significant to do so. Something like a breakdown of this ascending trend line and a couple of series of lower highs and lower lows on the lower time frame, further emphasizing that sellers are getting stronger before jumping into that bearish move. But let's see how the market will play out. If we can see series of lower highs, we can easily capitalize on the downtrend before even the breakdown of the $2,019.50 level happens. Now, talking about the bullish expectations, I still expect that the level around the 2032 and 2030 could still be an area to look out for buying opportunity, considering the fact that it is sitting above that ascending trend line. And if price continues to climb new highs, we look out for more opportunities to buy at the breakout of the $2,039.50 level. And I think we also have something at the 2055. So this is what we will be looking at to buy the XAUUSD today. So let's see how this is going to play out in the next 24 hours, and we shall be here again tomorrow to review how well these assets have been doing. So our center of focus for today's trading session on the XAUUSD is right within the 2032 and the $2,020 area, where depending on the direction of the breakout will give us an idea into where price is likely going for this week. So this is my simple view on the XAUUSD. I hope I made myself clear. And if you have any questions or you need some further clarification at some point, feel free to let me know in the comment section.